Have you ever seen an economy like this in your business life?
No, sir. I mean, I've been at this 38 years now, and, you know, I've seen cycles. Chrysler has been knocked down but never knocked out.
Right.
And I think the rate with which this has happened to our economy and to the industry is probably unprecedented. The rate with which this has fallen off, the rate with which consumers have shifted from the vehicles that they wanted, the larger, bigger horsepower, more convenient, more aspirational, to much more energy efficient, environmentally friendly. At least, look, I'm new to the industry, but all the people I've tried to learn from have said, this is unprecedented. Sure.
As you know, I mean, the history of private equity, you go in and you buy a company and you make it better and then you sell it for a profit. That's the nature of private equity.
Yes, sir.
Has that schedule for Chrysler changed?
Yeah.
Because of all these circumstances that no one could have foreseen, perhaps?
Not for me.
Same schedule you intended to embark on, you are on.
The relationship we have with Cerberus and the investors is fantastic. They have entrusted to me and the office of the chairman, Tom Lasorda, Jim Press, and so forth, you guys go run that business, and you run it to the best of your ability. Hone it, improve it, you know, make sure that we return to profitability, increase the value. The strategic options for Chrysler are really handled here in New York with Cerberus. And the beauty about that is I'm never compromised in my decision. I am totally focused on returning Chrysler.
You're the operational guy, and you'll make the decisions that have to do with
Absolutely.
Here's the dilemma that was raised by lots of people in your business. They say, why didn't we recognize fuel-efficient cars? Because the public wanted to buy our SUVs. They wanted to buy all the trucks and light trucks. That was what was selling. That's what the public wanted. So therefore, we didn't go out and create fuel-efficient cars. But because we didn't, Toyota did.
Yes.
And we found ourselves in a situation where what we then wanted to sell, because of oil and gas and economic, nobody wanted to buy. Yeah. And what they wanted to sell, the world couldn't get enough of. Yeah. Is that, in essence, what happened? Yeah,
I would have a slight variation on that. I think, and I talked with Chairman Greenspan about this when I was in the housing business. You know, we had an unprecedented bubble going on, right, where people were investing in their home and getting great returns, better than the market. Am I right? And so, you know, we saw almost $1 trillion+ of equity extracted out of the market. Consumers wanted bigger homes, bigger cars, bigger trucks to pull boats, horse trailers, camping. And so, again, it is true. I can think that I'll set a price out there, and really the industry has no pricing power today at all. None, the auto industry. But I could put
Meaning you have no pricing power because somebody will sell it at a more attractive price.
Exactly.
And you're dead.
And you're dead, either MSRP or incentive.
Right.
So a lot of it, I mean, I really subscribe to this, that the consumers tell us what they want and what they will pay. And we were doing that. If you think about the companies you talked about, what they were designing, building, and manufacturing for their home market, whether it's in Europe, whether it's in China, whether it's in Japan, are smaller, more fuel-efficient vehicles. So they had clearly an opportunity to, you know, enter this market, and also quality. Let's not miss that point. So what they were doing for their home market lent itself perfectly to fit what has now become a huge demand in the U.S. market, right?
Right.
For these more fuel-efficient. So people always ask me, well, so what happens if fuel goes down, and are you guys going to abandon this effort? Well, we are not. One is CAFE won't let us, right? And second, valuable lesson learned.
Okay. Join us online at charlierose.com.